anybody who at early stage invested in the Kareems or the Souk.coms of this world are now reaping the benefits. They've been patient, they've been supportive, they like what was happening, and eventually now they are harvesting the winnings that they have made. So this is exactly what we want to do. So that small companies, if you believe in them, why don't you just support them, even with a little bit of money, and therefore they can grow, and hopefully eventually you will have an exit strategy and leave them if they are bought or they go IPO or they start paying dividends. So these are the main three opportunities for early investors to benefit on a equity crowdfunding platform. This is where fundraisers or entrepreneurs offer shares in their company for investors to buy and therefore inject capital to that business. So it's not a loan. The entrepreneur is not under pressure of paying monthly payments for their loans and plus interest. They take the money and in return they provide shares in their company, and the investor become a shareholder. The money is generated from the crowd, from the people around us, family, friends, and the community that we live in and beyond. Because Fundedbyme does have 250,000 registered investors, so they can come from anywhere in the world and support your idea. So when an investor likes your project and they want to invest in your campaign, they press the button. That takes them to our partners in London, where the investments are collected and held in custodial accounts until the campaign is deemed successful. If the campaign is successful, great. We take our commission, we do our due diligence to make sure that share certificates or share registration is done in terms of the new shareholders, and then we release the money to the fundraiser or the entrepreneur in that. If the campaign is not successful, that means it did not reach the target amount of money that we have set initially, then the campaign is cancelled and the money goes back to the investors that contributed. In equity crowdfunding or loan crowdfunding, but we're talking equity mainly in our case, is now, as an investor, I want something in return. I want to be part of your business. I like it so much, and I'm willing to buy shares in your company and become a partner or a shareholder in your company. And in return, I will inject working capital so that you can grow that business. So I like you, but I like you, what's in it for me, kind of an approach. This is where reward versus equity/loan are different. It has a commercial sense into it. The market is evolving. Yes, we used to have big players with big money everything is large size or top of the scale. That's great, but also there's the majority of the new businesses are SMEs and startups. These can attract big investors like the VCs and the angel investors, but the process that they go through is a very lengthy process and the guarantees are very, very low. So they want an alternative funding process, and this is where crowdfunding comes to the equation. I personally think in crowdfunding risk is a little bit smaller because the amounts of money is much smaller, at very much smaller scale than VCs and angel investors, and also you can diversify. So as a small investor or a retail investor or an individual investor, all these terms describe the investor like you and me here, we can put a little bit of money, and that could be as low as $100, for example, in a number of campaigns. So the risk in terms of losing money is not huge because the money we've invested is small, and the number of campaigns that we've participated in will assure us that one of them will hopefully make it, and therefore it's worth the effort and the participation. In terms of investing, there's two types of investors. What the regulator classifies as retail investor or individual investor, these will have a limit of $50,000 within any 12-month period on our platform. Doesn't mean that this is the only amount of money they are allowed to invest, but on our platform, this is the amount of money that they are allowed to invest within any 12-month period. For professional investors or institutional investors, and there's a criteria to classify them, there's no limit at all on them. So this is in terms of the investor. In terms of campaigns or the fundraisers, there's also a limit, which is a $5 million for a campaign within a 12-month period as well. So these are mainly the limits set by the regulator, and of course we apply on our platform.